When in 2019, when we sold, we were on target to do, I think it was 2.3 million.
Okay.
I think that was going to be our annual revenue. I think we were probably like 2.1 the year before.
Mhm.
Um, we I tried to create a maintenance company. And what I found is if your management firm is not running rock solid and it's not running proactive, starting another business or going into a new area, like like if I'm going from Houston to Dallas or whatever, I'm not talking about like another suburb of Houston, right? But a whole different area. Um, it's not gonna be very successful. And so for us, that 2.3 million was all property management and all the fees associated with property management and some brokerage, not the leasing, but like some sales.
Today I'll be speaking with Pete Neubig, former co-founder and owner of Empire Property Solutions based out of Houston, Texas. Pete managed to scale his property management company to over 950 doors and then later sold it to Mind for a seven-figure exit. Pete was kind enough to join me today and goes over what his property management team was made up of, what they looked like, who his first hires were, how they ended up managing to scale to almost 1,000 doors, and then what the sales process was like once they actually sold the business. So without further ado, let's get straight to it.
Yep, I'll give you the real quick 5-second rundown here. I started investing in single family properties and apartment complexes back in 2001. I bought so many of them that I loved buying properties, but I didn't necessarily know how to manage properties. So I had to create my own management company to manage my own properties. After about a year, I found out that this management thing actually can make money, and the properties, the ones I bought anyway, weren't making any money. So I started third party managing properties. I thought I created the single family property management industry. And then I found NARPM and the National Association of Property Managers. I found out there's thousands of people that do this way better than I do. Joined NARPM, and then I took my 31 single family properties. We exited. We started in 2011. 2012, I quit my job, full time job, and became a property management company, or at least I ran it. And then in 2019, we exited, sold to Mind Management Company. We had 984 properties at the time, and we're in three markets. We're in Houston, Dallas, and Fort Worth. And then after I left there, I actually took a job with Mind. I lasted 18 months. I realized I was not employable anymore. And so I started my next business, my next venture, which was VPM Solutions.
Interesting. Okay. So when you first started, obviously you had your own rental properties, but let's say to get to your first 100 doors, what were kind of your tactics that you used to actually get things kicked off and start managing third parties?
Yeah, so I had a business partner. So Steve and I were business partners. Building Empire Property Management was the name of our management firm, and we had a business coach because I was an IT guy and Steve was a pilot, and so we knew enough to know that we knew nothing about business. And the funny thing is, the first 18 months that I met the coach, I didn't think the coach even knew my name or that he liked me because the coach only talked about marketing. So this was a huge eye opener for me. And if you're listening to this and you're just starting out, like especially property managers, we have a tendency to put all of our time and effort into operations, spending money on operations. But marketing is your lifeblood of your business. If you have no leads coming in, you could have the best operations and processes better. Steve and I used to joke like if it was my company, we'd have 10 doors and they would be run perfectly. Right. And if Steve ran a business, we'd have 10,000 doors and it'd be chaos. And it ended up being something in the middle, to be quite honest. So how do we get properties originally? Right. We had no SEO. Now, this is back in 2010, 2011. SEO is really new at the time. There's only a few companies that can help you, but we had no idea what we were doing. And so the first thing is that we did hire a company like Upkeep Media. We hired a company like that to help us out. We did a bunch of videos, like, so we were in the SEO game from early on because we knew we wanted to get to the front page of Google because that was back then kind of the holy grail. And we did all the stuff that I think you teach, Stephen. Is we did videos, we did offshoot content about how to lease your property in less than 20 days, how to do an eviction. We do all these videos, and my business partner, he did tons and tons of videos, like almost like I think a video a day is crazy. We also made sure that that we were on the Google pins, so we had to make sure
The
the
map
Google
section.
the map section. Yeah. So that was, but we knew that short term, that wasn't going to be that was long term, that was a long term solution. But we needed doors right away. So we did two things. The first thing we did is we joined because we were both the real estate investors. So we joined as a vendor for the real estate investment company group, and we taught classes there on how to manage your properties. And we actually taught them how to manage their own properties. And all of a sudden, we ended up getting clients from that because people realized I don't really want to manage my properties. You guys can do it better. And so we started getting clients from that. The second way we got clients was we put together a real estate, a realtor referral program. And Steve and I'll get back to the hire, Steve and Kevin, who became our marketing director, they would go out to just about anybody who would take us. And we found out all the brokers that did not do property management, which back then it was a lot more. Like Keller Williams didn't touch property management back in 2012, 2011. And so what we found out was more is less and less is more. And so we went to a bunch of brokers, and then we found out that only like 4 or 5 of us actually give us business. So we just created those relationships and really deepened those relationships. And then the third thing we did is my first employee was an accountant. That was my first employee, bookkeeper.
Yeah.
My second employee was a property manager, and my third employee was director of marketing. So we were early on to the game on making sure that marketing was a huge part of our property management business. And even to this day, Stephen, I don't know too many property management firms that are, $1,000 or less that actually have marketing a marketing department. But those are the three things that we did mainly to build up our portfolio early on.
Makes sense. It's something that Michael Masterson says, who wrote the book Ready, Fire, Aim. He talks about one of the number one rules of entrepreneurship is you need to be focused entirely on sales, or let's say 90% of your time should be focused on sales as the business owner until you're reaching multiple seven figures. At the end of the day, if you don't have clients, you have nothing to service. You can have the best service in the world. If you have 10 doors, as you were saying, who cares? You're not making any money. And at the end of the day, this is a business to make money, right? So that's definitely, you had the right mindset from the start. There you go. You bought the book.
Yeah, you and I spoke about 2 weeks ago, and I
Yeah.
bought the book, and I'm only in a few chapters, but yeah, when smart people talk about books that they recommend, I buy them.
Well, I'm honored.
I even read them.
It's a good one for sure. So what point did it, like, how long did it take you to get to those 100 doors, and how quickly were you able to scale up to that 950 plus mark?
So I think like every new company, you take doors that you probably shouldn't take, and you bump that number up, and then you prune back, and then you build up again. For us, that was sooner than later. We were managing 67 doors at the time. 30 of them were mine, all low income stuff, like just really, really difficult stuff to manage. Um, Owners had no money, right? They're buying stuff and they're buying, I call it like the Baltic Avenues, right? Monopoly board, that's the first properties that you can buy. Baltic Avenues, like the first one. It's the low income stuff. So not the residents have no money, the owners have no money, and you're kind of getting squeezed. The owner won't make the repairs, the residents won't, they won't pay online. You have to drive to the house to get the money, like all that crap. It was rough. And when I hired Lisa, my first property manager, she sat in my office and said, "Hey, we need to fire a bunch of our owners in our properties." And I'm like, okay. And she's like, "We need better properties to manage." And I gotta be honest with you. I used to own a home that my mortgage was $1,200. Okay. So when I bought my property in 2001, my mortgage was $1,200. So I never thought anybody would ever rent a property for $1,200 or more. It's a mindset, a belief I had.
Yeah.
She showed me, she goes, "Pete, I'm going to get his doors that rent for 1,500. This is Houston. 1,500 was the average rental rate at that time. Unbeknownst to me, I just had this. I hung out with all these investors that bought $800 rental properties. So
Mhm.
that was the sandbox I was used to playing in. And she elevated me and she said, "No, no, no." And so to get to those 100 doors, I could have got there a lot quicker, but we went from 67 back down to about 40.
Okay.
before we started getting regular doors. And it took me, I think it took me about a year to get those 100 doors. And
Okay.
I don't have the numbers in front of me, and it's been a long time, and I've slept since then. So, but I think it's been, it wasn't like we got 100 doors in a couple of months. I know it would took us longer than that.
The hardest part of any business is the start, so it's not surprising to hear that. Would you say that the strategy that you went, or the path you took of taking on those lower income, let's say, crappier properties to manage, was right for you at the time? Or would, if you had to do it over again, would you start by just trying to get better quality properties? Because I imagine the fact that you had managed so many doors led you to have experience when you were talking to the owners of the better quality properties, that you kind of use that as a point of reference, right?
I'll take it a different way. I think revenue solves a lot of problems, right? And so if I'm waiting for the perfect door, and you could be waiting 4 months. Okay, great. Now you got 6 doors. All right,
Mm-hmm.
you make $600 a month. Like you just quit your job making $100,000 to make $600 a month. Like doesn't make any sense. So even though you take bad doors, quote unquote bad doors, if until your marketing is working, you know, and getting the target client that you want, I think you got to take anything to survive.
Yeah.
Now, saying that, right, when you do something over and over and you are dealing with the most difficult of situations, it does make you a better property manager. There's no doubt. And so I do believe that it helped me close deals. But I will say this, Stephen, when you if you have a Class D building that that you run your management company in, and you're managing a bunch of Class D stuff, you will lose opportunities. I'll give you a great example, a story of this. So I used to own a 56 unit apartment complex made of 26 duplexes in Kashmere Gardens, Fifth Ward, Houston, known for basically drug violence and gang violence. Okay. And I own that property. Don't That's a whole other story over whiskey. We'll talk about that one. But Empire was literally managing out of that office. So I'm managing that 52 unit apartment complex, and we're managing all these doors. And most of the doors we had were Class D. They were just in other areas of bad parts of town. We had this guy come to our office. He wanted to give us his property that was a $10,000 rental. Do you think I got that property?
Probably not.
Absolutely not. I had another guy came in from Mexico. He had, I think, 20 properties, all Class B and above. Lost that deal too. It didn't matter how cheap I was, right? The way I was perceived was the value, how you're perceived, and we learned a huge lesson right there. That lesson right there. That once we realized we lost those deals, the first thing we did is I told my business partners on the apartment complex I'm no longer managing it. The second thing I did is I moved to a Class A building, smaller footprint, and it was a big. I didn't know I was going to be able to afford it, but I'm like, I got to do this.
Mm-hmm.
Class A building, and I rehauled our website. Our website. I'm from New York City originally, the Northeast. There's a guy named Crazy Eddie. He's kind of famous. He's like, I'm Crazy Eddie. He was the first guy that did like these crazy commercials, but low prices. Everything was like super low. So I used to call our website the Crazy Eddie websites of property management. If you looked at our website, we were the $50 a month guys. That's where we started. And so we did an overhaul and we changed it and we went percentage based, which I'm not saying good, bad, or indifferent, but the look, the feel of the website showed you more like Cadillac service. And all of a sudden we started making more money and started getting better clients because of our environment. You are the environment you're in. You know, like
100%.
right? Was your mom told you when you were younger? Don't hang out with Pete. He's a bad influence on you, right? Don't hang out with these guys. They're a bad influence, right? You're the average of the five people you hang out with, and you're also the environment that you're in.
100%. And especially in property management, it's not like a store or a restaurant where everyone's going to come to the store to see it, right? Your website is huge. I mean, that's what most people, especially in today's day and age, where most people don't even go into the office to speak to you anymore. It's done via a call, just like we're doing right now, right? So they really have your website to go off, your online reputation, and then when they actually speak with you, are the interactions professional? So it makes sense. Like if you want to attract Class A type of properties, you need to portray that you're a class A type of business.
That's
100%.
right. Your website is your storefront these days.
Yeah.
And I don't know anybody. I know very few people since 2020 that have an office now.
Yeah. It's because it's a business you can run entirely from home. You don't need to be in a physical office.
That's correct. And I can tell you that was my first largest expense was salary, and my second largest expense was office space.
Mhm.
And after 2020, when I started VPM, there is no office space.
Yeah. Imagine the amount you could have saved in property management with no office space.
Seven thousand a month.
There you go. That's a good amount. That's a nice
That's
salary right
significant.
there.
Yeah,
Yeah.
that's significant. Hmm.
So at 950 plus doors, like what type of revenues were you guys doing? And was that composed mainly of your management fees or was it from maintenance? Like what did that look like?
Yeah, great question. So when in 2019, when we sold, we were on target to do, I think it was 2.3 million.
Okay.
I think that was going to be our annual revenue. I think we were probably like 2.1 the year before.
Mhm.
Um, we I tried to create a maintenance company. And what I found is if your management firm is not running rock solid and it's not running proactive, starting another business or going into a new area, like like if I'm going from Houston to Dallas or whatever, I'm not talking about like another suburb of Houston, right? But a whole different area. Um, it's not gonna be very successful. And so for us, that 2.3 million was all property management and all the fees associated with property management and some brokerage, not the leasing, but like some sales. We had some sales. We didn't have a huge brokerage, but we did have a few real estate agents that would do our leasing and they would do some sales for us. So that was it. But I would say 90+% was property management and associated fees with property management.
Gotcha. Okay. So primarily recommendation would be focus on property management. Don't try to start a branch off of that unless you have things really dialed in.
Until you're ready. 100%. Now,
And
now say you can make an argument to say, well, Pete, um, I want to create like, okay, so I got it working in Houston. Now I want to go ahead and make it working in Dallas versus I want to create a maintenance company in Houston next. Because you know this, right? If you build a maintenance company, it's completely different type of company. You got to do all the things that you built the first company. You got to do that. Whereas if you go to a new city, you just take everything you have and you just kind of
copy
move it
paste.
over there.
Yeah.
Hmm. Yep.
How difficult is it to, let's say, infiltrate a new city? Because you're in pretty competitive markets, right? Like going to Dallas, let's say, that's not a tiny little market. How difficult was it to get traction in new markets when you would expand?
Yeah, so I did it all wrong. So so what we did is we went in and we hired like a property manager. Like you do not need a property manager originally, right? A good buddy of mine, Benton Cotter, he owns RentVest, owned RentVest, sold to Mind, and he's my boss at Mind. He did it a different way. What he did is he would do marketing first in that city. And then as they got leads, then they had like basically they had a realtor or like somebody there that would be boots on the ground. And
Yeah.
then they would end up hiring a property manager or they would do everything on the back office. So you can limit a lot of expenses going into a new market by not hiring all those folks right away. Like we hired a marketing person, a salesperson, and a property manager in Dallas before we had door one,
Yeah, you
right?
could have probably just used your marketing person that was focused on Houston and having them starting to focus on Dallas at that point too.
Yeah, I think looking back, I probably could have just started the marketing earlier on internet, right? Internet marketing earlier instead of spending money driving up there or or hiring a marketing person to go do the traditional networking, traditional marketing. Um, or I could have just had my marketing guy live up there for like 3 months and say, just freaking go out there and build all those relationships with those brokers and all those investor clubs.
Yeah,
So I would have done it differently because it was definitely very painful the way we did it, and it really took away a lot of profitability from our Houston market.
got it. What about from a sales standpoint? So you have marketing dialed in. and now you're generating a lot of leads. Who's handling those leads? What does that look like?
Yeah, so sales is to me is the redheaded stepchild because I'm an ops guy, and I'm sure Steve would tell you ops is the redheaded stepchild. But if you think about this, okay, marketing, their job is to get leads, and I break leads down to leads and opportunities. Now, some people break them down to cold, warm, and hot. I just did leads and opportunities. So we defined what an opportunity was. Marketing wants to move as many people as they can, as many leads they can into the opportunity bucket. Sales wants everybody to move to the lead bucket because we expect a higher conversion rate from opportunities than we do from leads, if that
Okay.
makes sense, right? So sales and marketing would battle from time to time about over like, is this, how many opportunities did you really have? Most of these are leads and so forth. Then when sales gets the deal and they close the deal, right? Most of the time, sales will do things like we'll give you a discount, right? Or we'll redline this, and then or we'll take your property even though it's literally in an area that we said is like a no-go zone, and then they give that to the property manager, and now the property manager and sales are fighting, right? So sales is fighting marketing, they're fighting operations. Poor sales. But if you don't solve these issues, right? If you don't define what an opportunity is, and there chaos ensues. If you don't define these houses, or we're taking these houses, we are definitely not taking these houses, and these are gray. And anything gray, it needs to be approved by the property management, supervisor or however you're laid out. So the way we were laid out, we had a marketing director, and then we had a social media slash admin person, and I feel like we had one more marketing person. I know we did, and I just can't remember. But we had three people in marketing. Oh, we had our boots on the ground marketing girls, and we ended up getting rid of them. We didn't need them after we kind of established some relationships, and maybe we just misutilizing them. Then we had a sales manager, and we had two BDMs or salespeople, and
Okay.
then each BDM because salespeople are super high I and they can't stay focused for more than 2 seconds. We gave them a high C as an assistant, and the assistants were virtual in Mexico. And so the assistants were the ones that took any new call would come in. The assistants would take it, they would vet them out, and then they would put it on the salesperson's calendar. The assistant would run CMAs, they would fill out the PMAs, they would do all the back end work, and the salesperson all they had to do was sell.
Okay.
And then we had a operations manager, and then we had property managers under the operations manager. So in the early days, Steve and I would fight if we're taking this unit or not. And then finally, we got Ross and Margot to do the fight for us. But they fought way less than me and Steve did because they had guidelines. And if you don't have guidelines, man, you're gonna have fist fights in the office.
Yeah, definitely. Was the sales process like a one call type of thing, or did you break it down into multiple calls? How would they do that?
Yeah, so look, if somebody calls me one time and gives their greatest asset to us to manage, awesome. That's a win. But we had to touch people 5 to 7 times before they would give us their contract. So, you had this whole marketing lead flow, and then somebody says, "Okay, I want to, take a phone call." The way we did it was the ISD would take the call and would vet them, right? Oh yeah, okay, so they actually do have an opportunity. There is a property that we would manage within the next 90 days. And she would gather just basic information, and then she would put it on the salesperson.
ISD being the remote team member.
Yeah, the inside, we call them inside sales developer, but assistant BDM.
Yeah.
So now the salesperson calls them. One thing that we stopped doing early on is we stopped going to houses. We never went to a house. We let Google Earth and our knowledge of the area be a kind of our guide, and the rent amount be our guide.
Yeah.
Did this hurt us sometimes? Absolutely. But we won more business because of it than we got business that was bad business.
Mhm.
Meaning the house was not what we thought it was, right? It was kind of a bad situation. My salespeople, we started doing this is you answer the same, like it's kind of like taking a leasing call. You do answer a lot of the same questions. One of my salespeople decided that they created a video. We created like I think a 20-minute video. It wasn't a short video. It was like a 20-minute video, and it went through the PMA, and it answered every question. And she says, before you meet with me, you got 20 minutes because we scheduled an hour time. I'm going to send you this video. I'm going to hang up. You call me back in 20 minutes.
Okay.
And when we did that, she had no, they had all the questions were answered and they signed a lot of times right then and there. So that video was very, it was worth its weight in gold. And we had another salesperson, she would text a lot. And we're like, man, you got to call them. But man, she closed deals over text. So the moral of this story is whatever your salesperson is doing that kind of fits their personality, as long as it's working and they're hitting their numbers and they're converting, don't try to change it. Like before we had Ross, who was the manager, we had Steve, and Steve would try to make them mold them into the way he does it. And I'm like, Steve, they don't do it the way you do it. So let's let them at least try some other things. With Ross, the way he managed was by numbers. How many activities are you doing? What's your conversion rate? And you know how many deals you closing?
Yeah. That's
And under Ross, we closed more deals than under Steve.
it's sales can be done in many ways, and especially in today's day and age, like you'll have different prospects. Some prefer to never even have to get on the phone with you and they just want a text message or email. You have others that want to sit on the phone with you for an hour. You got to kind of, I guess, not only know your salespeople, but also know who your lead is, right? Try to figure out what's their personality type, what's their preference in terms of method of communication, and so forth. So let's shift gears a little bit. So now you've been running the property management company for a number of years. You're at 950 plus stores. I think you said 984, if I'm not mistaken. Um,
984.
984. So what point are you like, I need to sell this thing? Like, how did that come to be? What did that look like?
All right. So I did not want to sell.
Okay.
All right. So my vision was that I would run a $5 million property management firm. I'd make $1 million and I'd be happy. I'm a simple guy. Steve, my business partner, he had this vision that we're going to be across the United States, 20,000 doors, you know, and so the vision in the partnership just deteriorated. And so Steve decided that he wanted to sell. I don't want to say this in a bad way, but we decided that Steve, we pushed Steve out of the business in a way. Like first he was a sales guy, then I hired salespeople, then he was a sales manager, then I hired a sales manager, and there's really nothing for Steve to do. And so I think he wanted to do something else. And so I try to tell him, hey man, you can go do something else. You still own 45%. We're not going to pay you a salary, but I'm going to be CEO and I'll just run your company for you.
Mhm.
And he just did not want to do that. He wanted to sell, get some money, and move on to the next chapter of his life. So that was the reason why. Honestly, we had run the business very poorly for the 5 years before 2019. 2019, I actually was making a lot of money. 2018, I made no money. We had a lot of revenue, 2.3 million, 2.2 million, something like that. But we were spending as much money as we were making until I got in and cleaned a bunch of stuff up, mainly marketing, sales, people, just too many. An IT guy. I'm like, why do I have an IT guy? Like, no, get rid of this. So I cleaned a lot like that. And that's what I mean by revenue solves a lot of problems. I just cut a lot of expenses. And next thing you know, we're making a shit ton of money. Sorry, a lot of money. Um,
Okay.
so when Steve decided he wanted to sell and we got an offer, at that point, because we had run the business so poorly, I could not get a bank loan and buy him out. And also the deal was a good deal. We got offered 1.75 times revenue, including all our revenue, which I think it might have peaked at two. But I can tell you today, we're recording this in 2024. If you get 1.5, that's a good deal now. So my understanding, so I think we were at almost the peak of it. And so I didn't have the money to buy him. Even if I did, and if I could go get private investors, I didn't want to, like, he knew what it was worth, and I would have had to pay him 2, 3 million bucks. And I just didn't want that over my head. So, worst case scenario is I sold. I made a bunch of money. I got a job making a bunch of money that, and then that was why I was upset that we had to sell. I mean, it wasn't the worst thing in the world. And now looking back, I, It's like when you are in really fit and then you stop working out, right? Like I used to do Ironman triathlons, and then for about 10 years I stopped doing it. The further I get from Ironman, the further I'm like, the more I'm like, holy crap, how did I even do that? Well, I haven't managed a property since 2020, right? And so now it's 2024. I look back and say, how the hell did I do that? I couldn't imagine starting another PM firm right now. Now I'm a broker of one and I own 10%, and I counsel and I coach, but I am not in the weeds. I have nothing to do with that company. So I couldn't imagine doing that. So I'm glad I'm happy where I am now. I'm glad I sold now, but I was bitter for about a year about selling. Yeah.
And once you sold, you then went to work for Mind. Is that it?
Yeah, probably the worst thing you can do. If you sell your business, if you're listening to this and you're going to sell your business, I'm going to tell you a couple of things. Number one, take less money on day one and exit. Don't try to get more money over a 5 year or a 3 year payout. Just, you know what? Pay me now and exit. Because if you do a 2, 3 year payout, right? They have the clawback, right? So just take a percentage, hey, 20%, I'll take 10% price off and I'll take it right now. You get your money, so you don't have to worry about are they going to make it, right? Do they have enough runway is a term that the VC guys use. So that you don't have to worry about that. Number two, you don't have to sit there and watch them dismantle your baby and just basically bastardize this thing. That was the hardest part for me. My clients would call me and I couldn't do anything because I didn't own the business anymore.
Yeah.
Like as soon as processes change, policy changes, software changes, your people aren't as happy anymore. There's a lot that goes on. And so I would see this and it definitely affects you try to be team mind and, I was trying to be team mind and rah, rah, but I'm seeing people are unhappy. My clients are unhappy, my people are unhappy. And so I was unhappy. And, you know, to be honest, I was not a very good employee for Mind, and that's on me. And I should have owned that sooner. I think the last 6 months I did a much better job than the first year, but that first year, man, I was kind of very direct and not a very good team player.
Got it. I mean, it's definitely a tough transition. Like the entire mindset has got to be a little bit different. And especially going from let's call it a small, medium sized business to a VC backed business, the culture has got to be entirely different as well, right?
Yeah,
So,
and the rules of the game are different. When you own your own business, I think the rules of the game is profitability and customer satisfaction.
yeah.
When a VC company owns it, it's growth. It's not profitability, and it's growth at any means necessary. And I think small business, you have like, oh, we're a family, right? Your team is your family, and whether that's good or bad or indifferent, it is most of the time. Where with VC, they're just pieces on a chessboard. Hey, we're running out of runway. We need to go get more venture capital money. So let's go ahead and reduce our expenses so we look like we're better, so we can go get more capital. And
Hmm.
so how to reduce expenses? You get rid of 20% of the workforce.
Yeah.
Like I was there for 18 months and they had like two or three hiring sprees and dips in 18
Okay.
months.
Yeah. It's a big change. 18 months isn't that long of a time. So what have you been doing since you left mine? Like you're still obviously very involved in the property management community. Can you take us through what you've been working on?
Yeah, so I started VPM Solutions in 2020. So right before the pandemic, I had this idea like, hey, I built Empire with virtual team members or remote team members, and that was the number one reason why I was successful in running a very active, proactive company and running, profitable. So I'm like, well, why don't I take this to all the other property management firms? And my original idea was just go create a company in Mexico and just get people in Mexico to get jobs in for U.S. companies. And then I changed it to a platform based. So today, VPM is a platform where property management companies go online and they can find, I think we have 37,000 plus profiles built on the platform. They can find them. They can, basically connect with them and hire them through our platform and pay them through our platform. And the remote team members can actually take free training. So we actually have over 30 plus courses right now where they can take training and get a VPM certification on, things like property meld, lead simple, pet
Pet
screening.
screening.
pet screen, things of that nature. Yeah. So that's what we're doing today. And we went live. We started building the product in 2020. We went live in June of 2021, and we're still, knock on wood, we're still here. Today we have over 907, I think 970 jobs on the platform, and we do about 350,000 a week in payroll, and we're going to do about 17 million in payroll this year.
That's awesome. Good stuff. What for that platform, are property management companies able to use it like when they scale up or need to scale down? Is it very easy to just kind of like offload a job if, let's say, things are slower? Or is it more so hiring like full-time type of staff?
Yeah, so it's really more full-time or part-time. It's not project-based. If you're gonna do project-based, I would recommend like Fiverr is probably better,
Yeah.
right? Hey, I need this guy to make, X whatever logos. Like that's gonna be a Fiverr thing. This is more like long-term solutions, right? Whether it's part-time or full-time, long-term solutions. So the number one job that's on there right now is like maintenance coordinator is kind of a big job that we see. Admin assistants, exec assistants, leasing assistants, marketing people, property accountants, all that stuff is on there. And then because they're contractors, as soon as you close the job, that's it, right? So if somebody's not working out, instead of like in the US, you have to get all this documentation, right? Because then they might file, a lawsuit against you. Here, you just say, hey, you're not working out, close the job, create a new job, and start getting applications. And most of our jobs get over 100 applications, which is a little too much, actually.
Gotcha. So if you were to go back in time to when you started your journey in property management, what's the one thing you would change to help you succeed at a faster pace?
The one thing I would change to help me succeed in a faster pace. Oh man, I thought we grew pretty rapidly. So I would say, I guess the one of the main things I would have changed is I would have changed the type of doors we took, and I would have probably trimmed that down sooner.
Yeah.
I don't think if you're starting out, I think you still need to take doors that you don't want to take. I really do. But you don't have to hold them for 4 years. You know what I mean? Like if you can get the marketing working for your other target, like shed those doors. I would say the biggest challenge I had with Steve was like he would bring in like a 30 unit apartment complex. I'm like, we don't do apartment complexes. So stick to what you know. I say I make a pizza, it's a cheese pizza. That's what I make.
Mhm.
So I wish I would have stuck to that saying more so because honestly, Stephen, we were doing eviction only services, lease only services. I think, by the way, like I'm not handy at all. I was managing a $30,000 rehab on a house that was worth 50,000. How we didn't lose money on that deal? We didn't make any money, but we didn't lose any money is crazy. So I would say if I wish I was focused more. I wish I would have stayed focused longer. Like we tried the maintenance division, like just focus on just doing that one thing. Build a marketing process for that. Let it cook. And then when you start building the business on the back end, then worry about processes and automation. I see too many people looking to do automation. I'm like, how many doors do you have? Like 20? I'm like, you don't need automation. You don't need a back end system. You don't even need freaking AppFolio at that point. Just do it on a spreadsheet with 20 units.
Yeah.
So I think especially when you go to these NARPM events, there's like this buzzword. Oh, like everybody's buying Lead Simple. People are buying Lead Simple. They don't even know why they're buying Lead Simple. They don't even have their processes flowed out on how it works right now. So it's garbage in, garbage out. So people come to us and say, I need a virtual assistant. I'm like, well, okay, what for? Well, I don't know, but so and so told me I need a virtual assistant. Like it's a recipe for failure. So just stay really focused on what it is that you do, grow the business, then worry about the operational part, automation part, and then grow again. And
Yeah.
when you grow, don't stop growth though. Like I know it sucks, and I know you're gonna have a churn and you're gonna have a high churn, but if you shut that spigot off, it's hard to get back on. So that's one thing that Steve taught me that we never did. I never stopped growing. Now I stopped growing because I was churning as much as I was coming in, which the team will stress out and all that stuff. But we knew we were fixing things on the back end, and eventually the churn slowed down. We never got it to stop. Churn will never stop. Just I think the average is 20% just per year.
Part
So
of the industry. I mean, almost any service business is going to have churn. They say focus stands for follow one course until success. And I think that's kind of what you're touching on there, where if you try to do too many things, you're going to end up doing nothing well. And we see it all the time where people just kind of have shiny object syndrome. But it's the companies that really hone in on one thing and they're like, no, this is what we do, and we're going to do it better than anybody else. Those are the ones we see that end up having that exponential growth. So it's a super important lesson there.
and you can
So
even take that lesson into what you do, right? How many people talk to you and they have 14 targets,
yeah,
right? Or the target is so wide. Like focus your target market, right? Really
yeah,
focus on
or
target.
even what avenue you want to market on. Like you can't be everywhere all at once. You can when you're a huge brand, but if you're at 100 doors or 200 doors, first off, you don't need to be everywhere at once to get growth, and second, you won't have the resources to do it. So follow one path, hone in on it, get it working for you, and then you can start to focus on another avenue.
There's so many people making so many marketing mistakes. And then you spend money instead of investing money on marketing. It's funny you actually brought that up because my team was just asking about Instagram. We're not on Insta. I mean, we might have an account, but we don't do anything on it. And I said, no, we're not doing anything on Insta because we're focusing on Facebook right now.
Yeah.
And that's it. Like, that's it. And so I'm glad you said that because now I did something right.
There you go. So if anyone wants to connect with you, what would be the best place for them to reach out?
Yeah, so I would say I'm old school, so email is probably the best. Pete at vpmsolutions.com. And that's VPM like virtual property management. So vpmsolutions.com. And you can connect with me on Facebook or follow my podcast, the NARPM Radio Podcast.
There you go. Thanks so much, Pete. Really appreciate it, and really appreciate your time.
Thanks, man.